If you've seen more than a couple of videos on my channel, you know that I'm all about the higher yielding types of dividend paying stocks. And when I say higher yielding, I mean stocks that offer a minimum of a 4% yield. The only exception I make to this is SCHD, which I think is a great dividend growth ETF, and I think that every dividend investor should own at least one dividend growth fund regardless of what strategy you're pursuing, whether that's income investing or dividend growth investing. But these higher yielding types of stocks and funds are what I personally choose to invest my money in, and they're the central theme for the content that I make on this channel. But probably the number one biggest criticism people like myself get who invest in these higher yielding holdings is that only older retired people should be targeting these types of investments. That the only people who should be investing in these higher dividend paying stocks are older people who need more stability in their portfolios. It's often said that unless you're old, you shouldn't be looking for cash flow from your holdings. Most investors are told to follow this format. If you're young, like let's say teens or your 20s, 30s, or 40s, and you're still working, then you should invest in riskier holdings that have the potential to grow your money faster. That might involve investing in tech companies, startups, or maybe just in some aggressive growth index funds. And then only once you reach retirement age and are no longer working should you start moving your investments into higher yielding companies like real estate investment trusts, business development companies, closed-end funds, master limited partnerships, and so on. This is a pretty common thing for people to do, and I honestly don't oppose to this way of investing. There's absolutely nothing wrong with investing in index funds or value stocks and then shifting your holdings towards higher yielding investments to help support your income later in life. But what I do think is absurd is that for one thing, we're telling people who have invested the exact same way for 30 or 40 plus years to all of a sudden change their investing strategy. What usually happens is investors will start shifting to a whole new way of investing and they don't know what to look for. If you have someone who spent 30 or 40 years investing in stocks like Clorox and Colgate, and then once they reach retirement age, they're told that if they want to live off dividends to move their investing dollars into REITs and closed-end funds, most of the time they aren't going to know what to look for in these types of holdings. They don't have any experience with holdings like REITs, BDCs, master limited partnerships, and I've seen so many people get burned while doing this. What ends up happening is so many people will end up putting their money into companies like Orchid Island Capital or Armor Residential, and then they'll realize a year or two later that that was a big mistake. What makes it worse is that these people are burning through their retirement dollars. All they're trying to do is invest the money they spent decades on acquiring into higher yielding investments that'll help provide them with the income that they need. It's money that people in this life stage cannot afford to lose on a terrible pick. So when these types of investors reach retirement age and they want to invest in the higher yielding types of holdings, not only do they have to change the way they've been investing for their entire lives, but they arguably need to be even more knowledgeable in investing than ever before in their lives. Because so much is going to be on the line for people in this situation. If you're the kind of investor that's planning on doing this, like if you want to hold index funds and value stocks before investing for dividends because you plan on living off dividends later in life, then it's really important that you educate yourself on good higher yielding investments before you make the shift over in your portfolio. But a big reason why I think younger people should consider the higher yielding investments is because in my opinion, it's that income investing is also the best investing strategy to pursue if you want to retire early. Because when it comes to retiring off index funds and other types of non-dividend paying investments, you're going to have a much harder time trying to figure out how soon you can actually retire. The whole point of saving and investing is to someday live off your investments, if not fully, then at least partially in conjunction with something else like Social Security. So you have to try and figure out that magic number that you're saving for if you're investing in index funds or something else. Is it $1 million? Is it $1.5 million? Are you accounting for the stock market fluctuations since you'll be selling shares of your investments? These are all questions that are going to be much harder to answer compared to someone who's pursuing income investing. And it's no surprise that there's plenty of financial advisors out there who claim that they can answer these complex questions, but as long as you pay them enough money to figure it out for you. But it's a whole lot easier to figure out when you can actually retire if you're pursuing income investing. If you're trying to figure out how much you'll need in order to live off dividends, all you have to do is add up your monthly expenses and then maybe add some extra in there just for fun. Let's say you determine that you want $4,000 every month in dividends. That's a very clear goal, and anytime that you have a clear goal, it helps make a goal feel more attainable. Because saving and investing involves more than just a math component, there's also an emotional component. With index funds, you're just putting money into something and you have no idea when you can stop. It feels like an infinite pursuit if you don't have an end goal, which again is much harder to determine if you're relying on non-dividend paying investments. If you want $4,000 a month in dividends, you can easily determine how close you are to that goal. If you add up how much you earn each month in dividends from your portfolio and remember to divide your quarterly paying dividend stocks by 3, you can not only see how close you are, but you can also see a percentage. So if you add up and you find out that you earn $800 a month in dividends, you're 20% of the way to your goal of retiring early. Another reason why younger people should pursue higher yielding investments is because you might actually find it more addicting to invest for cash flow over trying to pick stocks that you hope will grow in share price. Some investors like myself are just more motivated by the cash flow they receive from their investments. It's for this same reason that some people invest in rental properties. Earning that additional income every month or quarter depending on the dividend frequency is a lot more exciting to some investors. So although buying rental properties is a very respectable way of earning additional income each month, it kind of blows my mind that investing in, say, business development companies or closed-end funds isn't viewed as another means of earning income unless you happen to be retired. Considering the fact that buying BDCs or other higher yielding investments requires much less homework and analyzing than purchasing a rental property. It's also much quicker to sell all of your shares if you need to in an emergency, or just some of your holdings. You don't need a good or an excellent credit score to buy these stocks, and there's no additional considerations you need to keep in mind like maintenance on a rental property. I know there are some tax benefits like depreciation with real estate investing, but considering how easy it is to get into higher yielding investments, there's just much more attractive things to it than buying rental properties right now, considering how expensive home prices currently are. One of my goals for creating this YouTube channel was to make income investing a more mainstream and respectable way of investing. While there's nothing wrong with value investing, index fund investing, or dividend growth investing, some of which are things that I also do, income investing has a lot of benefits to it, and I think all people should at least consider it. Investing for cash flow is a very fulfilling method of investing, and the sooner you get started with it, the better. I can tell you I wish I would have gotten into income investing when I was much younger instead of pursuing these riskier types of stocks. Because in my opinion, investing is ultimately about replacing your income, and it's better to do that by pursuing dividends and pursuing the higher yielding investments which are going to make that dream much more attainable. It's important to not chase the highest yields possible, but to just pick stocks in these categories that are yielding around average for these kinds of holdings. But with that being said, that's going to wrap up today's video. If you're looking for high-yielding stock ideas, then feel free to check out some of the other videos on this channel. I've reviewed dozens of higher-yielding stocks, ETFs, and closed-end funds offering yields anywhere between 4 and 30%. Also, like this video if you want to see more high-yielding investing content. Again, thank you all so much for watching today's video, and until next time, take care.